UK inflation drops to 2.8%. What this means for your wallet. In a recent announcement, the Office for Budget Responsibility (OBR) revealed that UK inflation has significantly decreased to 2.8%. This news brings a wave of optimism for consumers and policymakers alike, sparking discussions about what this means for everyday spending and the overall economy. In this article, we'll break down the implications of this drop in inflation, how it affects your wallet, and what to expect moving forward. Inflation, in simple terms, is the rate at which the general level of prices for goods and services rises, eroding purchasing power. A decrease in inflation indicates that the rate of price increase is slowing, which can offer consumers a bit of breathing room. For many, the impact of inflation is felt directly in their wallets as it influences everything from grocery bills to utility costs. The latest figures show a marked decline from previous inflation rates, which hovered around 6% earlier in the year. This reduction can be attributed to several factors, including falling energy prices and supply chain improvements. As prices stabilize, consumers may start to feel less pressure on the budgets, allowing for more discretionary spending. With inflation at 2.8%, here are some key areas where consumers might notice changes. Grocery prices. Many households have faced rising costs for everyday items. A lower inflation rate may signal that food prices will stabilize or even decrease, easing the financial burden for families. Energy costs. Energy prices have been volatile in recent years. A drop in inflation can indicate more stable energy prices, which can significantly impact monthly utility bills. Interest rates. The Bank of England may respond to changing inflation rates by adjusting interest rates. A lower inflation rate could lead to maintaining or even lowering interest rates, which would benefit borrowers, particularly those with mortgages. Wages and employment. As inflation stabilizes, there may be room for wage growth without the same level of pressure on prices. This could lead to better job opportunities and increased consumer confidence. While the drop to 2.8% is encouraging, it's essential to consider various viewpoints. Positive outlook. Many economists and financial experts view this reduction as a sign of economic recovery. It suggests that the measures taken by the government and Bank of England are having a positive effect, and consumers can expect a healthier economic environment. Cautious optimism. Some analysts urge caution, noting that while the decrease is positive, it's important to remain aware of potential economic shocks. Global events, such as geopolitical tensions or supply chain disruptions, can still impact inflation rates. Long-term effects. Questions arise about the sustainability of this inflation rate. Will it remain stable, or is this a temporary improvement? Consumers and businesses alike will be watching closely to see how these trends develop. Government policy plays a crucial role in shaping economic conditions. The OBR's projections are based on a range of factors, including fiscal policies and global economic trends. Policymakers will need to navigate carefully to maintain this positive momentum while addressing ongoing challenges such as wage stagnation and regional disparities in economic recovery. Looking ahead, several factors will influence inflation and the economic landscape. Policy adjustments. The government may introduce new policies aimed at fostering economic growth. These could include investments in infrastructure, incentives for businesses, and support for low-income households. Consumer spending. As inflation stabilizes, consumer confidence may increase, leading to higher spending. This, in turn, could stimulate economic growth and support job creation. Monitoring global trends. International developments will continue to have a significant impact on the UK economy. Keeping an eye on global markets and trade relationships will be crucial for understanding potential future changes. The drop in UK inflation to 2.8% is a significant milestone for the economy and offers a glimmer of hope for consumers. While it's essential to approach this news with cautious optimism, the potential benefits for everyday spending and economic stability are clear. As this situation evolves, we encourage you to stay informed and engaged. What do you think about the recent drop in inflation? How has it impacted you personally? Share your thoughts in the comments below. If you found this article helpful, don't forget to subscribe for more updates on economic news and what it means for you.